So by now, we know the de-dollarization story. The world is starting to dump US dollars and China is leading the charge. They are afraid of the sanctions imposed on Russia and how it could happen to them, especially with the US-China relations burning up in real time. And I'm sure we have seen this chart before by the US Treasury themselves, and it's showing how China has been deleveraging their Treasury holdings. They started out 2021 with over $1 trillion worth of treasuries, but 12 months later, they are down to just $867 billion. And apart from Japan, which is selling off dollars for yield curve control, China is leading the world in dumping dollar denominated assets. But now we have an interesting report from Bloomberg with an extremely curious title, right? China keeps faith in US bonds even though it sells treasuries. And according to the report, China has offloaded $12.6 billion of treasuries last year, but bought over $120 billion worth of agency bonds, and that shows us that overall, China has actually increased their holdings of American bonds. And does this mean that de-dollarization is a lie? Is China secretly helping the US government by buying up American debt? Isn't China afraid of their assets getting frozen from the sanctions? And all these, they are great questions that need answers. And this is where we need to dig deeper into the numbers because the devil is truly in the details here. But let's quickly touch on a misconception about de-dollarization. And I think this term has been used so many times that its meaning has been twisted, right? And the narrative goes something like this: China wants to break free from the dollar system. They want to sanction proof themselves, so they're going to dump all their dollars tomorrow, next month, or in a year's time, right? However, we must understand that the dollarization does take time, and just because you want it next year doesn't mean it will happen next year. And this is the problem we are all forgetting: the fact that China still needs US dollars to import commodities and to control the exchange rate of the Chinese yuan. Now, we know that China is taking steps to conduct transactions outside of the dollar. That part is very obvious. They are buying Russian gas using the yuan. They are setting up the yuan clearing arrangement in Brazil and also pushing for the classic yuan for oil trade in the Middle East through the Shanghai Petroleum and Gas Exchange. However, the dollar is still the main currency of trade, so China has no choice but to hold some dollars in their reserves for international trade, right? And the second reason is just as important. China needs to keep their exchange rate low enough to become a net exporter. China needs tight controls on their currency. They need the ability to weaken the Chinese yuan if it gets too strong. And since every currency is still pegged to the dollar, they need a constant inflow of dollars, right? If the yuan gets too strong, they simply sell the yuan for US dollars to weaken their currency. Now, China is still focused on cheap exports to keep its labor market strong, so they constantly need to buy some dollars to suppress the yuan. And what does China do with all those excess dollars? They reinvest it back into US treasuries in order to get some yield, even at the risk of getting sanctioned. That's right. And that is why we shouldn't be surprised that China still buys US bonds, because if inflation in the US at 6 to 7%, and it's probably more as we all know, you better reinvest those cash or it will lose purchasing power. However, something interesting is happening. China is dumping treasuries as we know, but their agency bond holdings have increased. And why is that happening? And the main reason is to chase higher yields. Agency bonds are similar to US treasuries, but they have a higher yield. Now, agency bonds are issued by government agencies or government sponsored enterprises and not the US Treasury. So the default risk is higher. And if you remember the names Fannie Mae and Freddie Mac, they are home mortgage companies backed by the US government, and the bonds issued by these companies are considered agency bonds. And there are many other agencies in the US that issue bonds beyond the US Treasury, and this includes the FHLB bonds and bonds issued by the Federal Farm Credit Banks. And if we look at the yield spread between treasuries and agency bonds, we can see they have been rising higher since the Federal Reserve started hiking rates, right? And now we are at almost 30 basis points difference. So for example, if a US Treasury is yielding 4%, the agency bond from Fannie Mae or Freddie Mac might be yielding 4.3% or more, right? So it's obvious China is chasing yield, but why? And let's take a step back and think for a minute, right? You are the Chinese government. You still need to reinvest your dollar surplus into bonds, and whether it's agency bonds or treasuries, if the US government wants to freeze your assets, there is no escape. So you might as well go for the bond with the highest yield. And whether you are a central bank or an individual investor, the best time to buy bonds is when bond prices are low and yields are high, right? And we must also look at where we are in this hiking cycle. The market is betting that we have 2 or 3 more rate hikes left. We have Goldman Sachs and Bank of America forecasting a hike to 5.5% before the Federal Reserve starts to pause. So it does make sense for China to buy US bonds at this period because after the pause happens, comes a rate cut and this will send bond values up, right? And if a recession does happen, the market could rush back into bonds or the Federal Reserve will do yet another QE to buy up tons of bonds to push yields down. And this will have a magnified effect on China's agency bond holdings and they could potentially earn more than the normal US treasuries. Now, let's just remember that back in 2008, the US government bailed out Fannie Mae and Freddie Mac back in the property crisis to the tune of 187 billion. So it's not a stretch to assume that Powell will save the agencies or see another real estate meltdown again. But make no mistake guys, the dollarization is still happening. We just need to zoom out and look at the bigger picture. Now, we have established earlier that over the past 12 months, China's treasury holdings has dropped by around $166 billion. Some were sold and other bonds were maturing. And looking at China's holdings of US agency bonds, we can see they have indeed a gigantic amount of agency debt under their books, totaling over $250 billion. And if we add up every type of bond, China has a total of $1.4 trillion worth of long-term US securities. And that is a huge amount. And it's easy to assume that China is still a big fan of US debt, right? But what we also need to focus on is the long-term trend of China's bond holdings. And looking at their bond holdings over the past 12 months, we can see the $160 billion drop in treasuries calculated earlier, right? It's there. We can also observe an increase in US agencies from $205 billion to $253 billion, and that is a $48 billion increase over the past year. So yes, China has been buying more agency bonds. It says right here using treasury data, right? But overall, guys, China still holds fewer US bonds today than 12 months back. They are down $127 billion, which is slightly over 8%. So the dollarization is still in effect. China is still gradually unwinding their holdings of dollar-denominated assets. Nothing materially has changed on the upside, right? And this is assuming all the agency bond purchases were done by China's central bank. It could be purchased by their commercial state banks or individual investors as well. And the data is very opaque, so this is as clear as we can get. So yes, China still holds a ton of US bonds, and this should be a big concern for both sides. The dollarization is proceeding, but it is still slow and steady. And in the meantime, China's holdings could always get frozen 100% if they get on the wrong side of Washington, right? And remember, we recently had Anthony Blinken warning China of consequences if Beijing supplies weapons to Russia and tensions between the two countries are escalating. It's not getting better. So why isn't China de-dollarizing faster? I believe it boils down to two things, right? China's reopening and they need to restart their economic engine, and to do that, they need to keep their currency, the Chinese yuan, in check. Goldman Sachs is forecasting how China's reopening will boost global GDP in 2023 by up to 1%. But to accomplish that, China still needs a weaker yuan to drive cheap exports to the world, so aggressively dumping treasuries isn't feasible yet. And secondly, China is still working out on internationalizing the yuan. If you want to hold fewer dollars, you have to make sure your currency becomes more useful and can be accepted globally, right? And that's why we see China pushing the Saudis to sell yuan for oil. And that's why they are establishing the Belt Road Initiative, right? They want to increase the usefulness of the Chinese yuan, the digital yuan, so that they can hold fewer dollars themselves and further sanction-proof themselves, right? So this will take time, guys. It's not an overnight affair. We will continue to see China buying and selling US bonds, but I expect their overall holdings to gradually drop over time. And we have truly no idea what's going on behind the scenes. Is China using their bond earnings to slowly stockpile physical gold? Are they waiting for the US economy to crash and the Federal Reserve to reinflate bond values before selling once again? There's no concrete answer here. We just have to wait and see because there are just too many unknowns at the moment. But let's realize just how much leverage China has over the US bond market as well, right? Now, if we do our calculations, we will realize that China holds almost 12% of foreign US treasuries and 20% of American agency bonds. And this is a big amount. And if China starts to seriously deleverage their bonds, this could cause tremendous upward pressure on bond yields and cause the Federal Reserve to step in, right? Powell might be forced to save the day once again by printing money all over again. And because China holds a ton of agency debt, it could also cause damage in the US mortgage market, which is pegged to all the MBS, right? Because the bonds are MBS. And according to Bloomberg, China's on track to buy around $75 billion worth of agency bonds this year, or about half of all foreign demand for the securities. And if that happens, guys, then the United States will be even more indebted to China. So just as China is vulnerable to the United States, the fate of the US economy also rests on China. Sure, Powell can come in and print up money to backstop any bleeding in the US bond market, but that would just undermine further trust in the US dollar and cause inflation to soar even further. And if the United States does the unthinkable and sanctions away China's bond holdings, their money, it will be an even bigger mistake. Now, I fully believe that the dollarization is just going to continue, right? Just take a look at this chart, guys. It shows that the share of the dollar has been slipping for decades. This was long before the US imposed sanctions on Russia and froze their assets. And now that they did, the whole world, they have all woken up, and moving away from the dollar is inevitable. But that doesn't mean it is imminent. It won't happen tomorrow. This will take some time, so we have to be patient. So let me know what you think. Will China eventually break away from the dollar, or is the reserve currency of the world too strong to escape from? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.